Welcome, traders. If you've ever struggled with predicting market moves, missing out on great trades, or getting caught in false breakouts, this video is for you. Today, we're diving deep into the most important Forex trading patterns that will significantly increase your win rate. These patterns are used by smart traders to make accurate predictions and maximize profits. By the end of this video, you'll know how to identify high-probability Forex patterns, the difference between reversal and continuation patterns, how to trade these patterns effectively, and pro tips to avoid false signals and bad trades. So, whether you're a beginner looking to master Forex patterns or an experienced trader looking to sharpen your strategy, stay tuned. Let's get started. First things first, what are Forex patterns? Forex patterns are recurring price formations that give traders clues about what might happen next in the market. They work because markets are driven by human psychology, and certain patterns repeat due to traders' collective behavior. There are two major categories of Forex patterns. Reversal patterns. These signal that the current trend is losing momentum and may soon reverse direction. Continuation patterns. These indicate that after a brief pause, the market is likely to continue in the same direction. Understanding these patterns helps traders spot high-probability trade setups, avoid chasing the market, and enter before a big price move. Let's break them down, starting with reversal patterns. The head and shoulders is one of the most powerful bearish reversal patterns. It forms when the price fails to push higher, indicating that buyers are losing strength. How to identify it? Left shoulder. Price makes a high and retraces. Head. A higher peak forms but quickly reverses. Right shoulder. A lower high, signaling that buyers are weak. Neckline. Break. When price breaks below the neckline, the pattern is confirmed. The steeper the neckline, the stronger the potential move down. Double top appears at the end of an uptrend and signals a potential reversal to the downside. Double bottom forms at the end of a downtrend and signals a possible move upward. How to trade it? Wait for the neckline break before entering. Use volume confirmation to increase trade accuracy. Set a stop loss below the second peak or trough. Rising wedge, bearish reversal. Price rises within a contracting range, showing a loss of bullish momentum. Falling wedge, bullish reversal. Price moves downward within a narrowing channel, suggesting a breakout to the upside. Always wait for a confirmed breakout before entering a trade. Bullish flag. Price moves up sharply, consolidates briefly, then continues upward. Bearish flag. Price drops significantly, consolidates, then continues downward. Best entry. After the breakout of the flag formation. A pennant forms after a strong price move and leads to a continuation of the trend. Works well in both bullish and bearish markets. Ideal strategy. Enter when price breaks out with strong momentum. Ascending triangle. Bullish. Buyers push price higher, but resistance holds until a breakout. Descending triangle. Bearish. Sellers push price lower, but support holds until it breaks. Best entry. Place a trade once price breaks the triangle with strong volume. Order blocks are institutional trading zones where smart money accumulates orders before major price moves. How to trade order blocks. Identify where big institutions have placed large orders. Wait for price to return to the order block before entering. Use confluence with key levels and liquidity sweeps for the best setups. Essential risk management rules. Never risk more than 1-2% per trade. Always set a stop loss to protect your capital. Use proper position sizing to manage risk. Combine patterns with volume analysis for better accuracy. The key to long-term success in Forex trading is risk management. Even the best strategy won't work if you don't manage your losses. Now that you've learned the most powerful Forex patterns, it's time to put them into action. Understanding these patterns will give you an edge over other traders and help you make more informed trading decisions. Which pattern do you use the most? Drop a comment below. If this video helped you, don't forget to like and subscribe for more Forex trading content. Remember, successful trading is about patience, discipline, and knowledge. Stay focused, stay smart, and keep trading like a pro.